Welcome to Trading Lounge and the US stocks for Thursday the 18th of June. And Thursday we cover Alibaba, Goldman Sachs and Exxon Mobil, but I also will lightly go over many other stocks as well once we completed Alibaba, Goldman Sachs and Exxon Mobil. So with Alibaba here, we're looking at a positive count, so we're looking for further upside for this market. And is there anything else it could possibly be? I think it's looking pretty good actually. Let's go in and have a closer look. So what we're looking at here is 1 and A, B, C for 2 here, and then pushing up. This trade's been closed out, of course, in this space, but basically 1 and 2 and 3 and 4 and 5 to make 1 here, looking for a pullback into this space here. And what we need to see now is just a little move higher here for this. So if I can make a few assumptions here, so a move up here, and then an ABC pattern coming into here and then moving up higher from that point. You may already be long in here for this, so we need to take a look at, I'll just put that on the top there for the time being. So don't chase that market up there if it pops up there. That's not what we it's not what we're looking at this stage. 224. Okay, so let me just go in closer here. I think that I need to go in on a tick chart here. That's 20 ticks, so I might just go to 100 ticks. Right, so I've got our wave 1 and oops, that's somewhere over there for something else. I thought that was the stock code here, but we need a stock code here as well so people know what we're talking about. Okay. Yeah, looking at this as corrective, but for this to be corrective by the buy, we need to take that top out here. Okay, we haven't taken the top out yet here. So it's possible that this could work lower in terms of an A and a B and a C up here, then down for 1, A, B, C back for 2 here. Looks like it's higher here, doesn't it, than that? Yeah, I think we're good to go here. The other way I could put this wave 4 is over here. As an A and a B and a C wave to here. Let's just see if we climb higher. So the important things here, the minor levels here are 10, 20 and 30. They're the big ones, right? So currently at the moment we are halfway between these two here, so we're at this level here. So what I should do is to just move that down a bit, copy this one here because it's a little bit darker, put it up here. So these are the minor levels, and now we're talking about sub-levels. So with the sub-levels between 20 and 30, the Fibonacci numbers are 1, 2 and 3 and 5 and 8. So we can put that 1 at 8 there. I'll drag that down to 2 here, and we'll also put that at 3 here roughly. So 1, 2 and 3 this stage. So I would stay bullish in this market until the 222 here, always the 2 here, with 1, 2 and 3 here, the 2 here, when we're playing around with 2 up, when we're playing with the number 2 here and we're above 2, then if the 2 becomes the resistance, then the market will be pulled down to this level here. And if this becomes the resistance, then it'll be pulled down further from that point. So the 2s as resistance for the downside are important. And I better put the 1 in here because it makes up group 1. 1, 2 and 3 make up group 1 here. and they're important. Currently we've got support on group 1, so we'll be looking higher. In terms of the market moving higher through here, we would probably, if it was going to move higher, we've got our reaction, would see the first high above the level and then another corrective move here for this. If you're thinking about going long, then you need to wait for this pattern to come into play here for that. So yeah, it looks bullish. Nice strong third wave here. The fourth wave's in 3 waves, so I'll leave it there, but it could be placed elsewhere here. We could look at these as 1 and 2 and 1 and 2 and 1 and 2 and moving to the upside. We just need to be careful as well with that. As I mentioned, just recapping, if the 2 becomes the resistance, then we've got a problem and we'll be on the bearish side, and we'll need to look at this as an A and a B and a C to the upside here. Yeah, so we'll keep an eye on this one. And Goldman Sachs is next, so I'll just come back to the 4-hour chart, and we'll just use the 4-hour chart as being central, because when I open a chart, it'll open on the 4-hour chart then. So Goldman's here on this, so we've been 1, 2, 3, 4, 5 up through to here, and then we're looking for an A wave, a B wave, and a C wave. The B wave coming back to the 50-60% retracement level, which it has done, and it needs to drop from here. Any move above this, because we're above the 61.8%, that mark here, any move above that we can go long. Now, you can short this, but I'm not going to do it for 2 reasons. I don't want to short against the main trend, and secondly, I'm above the closest largest number here. If this situation was under the level here, then that wouldn't be a problem, because any move down here is going to bounce off that 200 for sure. And yeah, so not a very sort of long-termish sort of risk-reward trade here for that, even though it can move lower. So, and this is kind of what we're expecting for the, the S&P and all the rest of it, so that will follow that in due course. The next stock is Exxon Mobil. So with this particular stock here, we'd been looking at it as a corrective pattern to the upside as 1, 2, 3, 4, 5, A, then an A and a B and a C here, and then 1 and 2 and 3 and 4 and 5 here for wave 4 at the 50 area here. The move down here appears to be impulsive, so I think last time we were speaking we were looking for a move to the upside. We've sort of got that. It's retested the 50 and it's like failing that now. We can short it below here for this. You could and would probably be a good idea to take some profit at the medium level here, so that's 40, and we just put that in grey here, so we can certainly expect a bounce from that point. Now, if the market's going to come down further through here, then we will we'll look to short that there, but we'll leave the 40 as the target area for this for the time being, and we don't have to worry about it being support here. We're also looking at crude oil turning lower as well, so we could actually have a look at that, I guess. So if that gets triggered here, just finish this off here, then we want to take profit at that level here. Okay, so we'll just get that done. I'll just check the tick chart for this, see if I can see any other detail in here for this. Oh, sorry, right. Yes, right, okay. So I haven't updated this, that's okay. Well, what we'll do is we'll go straight to crude at that point, I think, because I haven't updated that. It's not going to mean much. So we need to bring in crude here. So just give us a little bit. Right, so let me just get organized here a little bit. There's our $40 mark here, and it's a medium level, $40, so we'll put that there. That should be a bit darker than that. That's it there. Right, so Just checking here a little bit. There's a couple of problems here, but when we first look at this here from the $40 mark here, we can see that we've got 1, 2, 3, 4, 5 here. Then we've got an ABC here. So we can call this wave 1 or wave 2 or wave A and wave B here. Then we've got this down here is 1 and 2, nice strong third wave here, an A and a B and a C for wave 4 here. And then this also looks kind of, I don't think I'm going to be able to resolve this in just that time. I can see we got, or have we, where are we? 1, 2, 3, 4, 5. Oh, so 1 and 2 here, 1, 2, 3, 4, 5 for third wave, fourth wave, fifth wave here. So that brings us down here for that, which was right. Well, I had that there anyway. Just talking to myself. And so this is all a little bit complicated. So I'll just come over here. This looks like it's in 3 waves here. This looks like it's 1 and 2 and 3 and 4 here and 5. So we've got an impulse wave here where we don't want one. So I think that we may just have all of this as the A wave to here, then an A and a B wave here, and then a C wave here for that. So yeah, we should push down here in 5 waves. We should come down here in 1 and 2 and 3 and 4 and 5. I can't draw on that side of the tick chart, unfortunately, on that side of the price. So it's looking bearish. So I just want to move into here. So this number here, we could look at it another way too. We could look at this as, well, the level here, 800. This is all a group 2, so 720 comes in here. So that's going to play out. And also 65 here, and then we come down here. So this is all of group 2 here, 65, 72, and 80. And the 61.8% retracement level comes in on the lower end of group 2. So it's going to struggle there for a while. So long as you know that, that's where the support's going to be. And it could also change trend and move up from that point to there as well. I can't see it though. I mean, I'd like to call this down here as 5 waves, and then I'd like to count this up here as an ABC, but it counts up as 5. So I have to revert back to here and look at this. Let's just fill this in here while we're here. But one way or another, we're going to be looking at weakness here. Yep. So, I mean, it doesn't really matter, actually. We should see further downside for crude here, and that should be in line with the S&P 500, and we're seeing that now. So technically, just looking at this and any bullish pattern here, well, that's corrective. So we can actually just, a little bit late, Pete, but, you can short it through that point there, and you can put the stop here for that. But the reason I'm looking at this, of course, is because of Exxon, of course. So, but I'll just finish off what I'm doing here. Otherwise, it just gets a little bit messy. So, yeah, we can short crude at that point, and we've got, just to give you here, we've got no, it should be all right. But just understand that there is another little group 2 in here, by the way, that will play out, but this is the bigger picture here. Okay, I best move on back to my thing. I'm just going to save that. Just wanted to check to see where crude was. In a nutshell, it's being rejected from, from the high here. That's what's occurring here. And we're looking at some sort of move down. It may just be the A, the B, and the C here, because don't forget with crude, actually, the move, if you go to our website and have a look at crude oil, you'll see that the move up here has been positive at that point. So we're looking at this as wave 1 or wave A up here for this. So, and we'll be looking back this here for wave B. So it's okay for this to be in 3 waves here for that. But yeah, just save that again. We'll just go back to Exxon Mobil. So stay here for a second. So yeah, haven't updated that. So let's go back to the 4-hour chart here. And this is where we spoke last time. I remember even yesterday or something, wasn't it? So you could short it here, but what I'm concerned about is that, and crude looks like it's moving down further, so it should move down, but just be mindful that there can be an A wave, a B wave, and a C wave to test here a little bit higher, and then move down from that point. Either way, we should be moving down, and we can take profit at the 61.8% mark and the $40. 2 nice reasons to do that in this case. And for the stop here, I just wanted to go over this a little bit. I know I've mentioned it before, but if you're going to put a stop in the market at a level, then you've got the arrival, the reaction, and then the first high above the level, and then the market's going to come down. Now it's either going to fail at this point and come down, or it's going to move back up at that point. So it's that there you want to put your stop, or reverse the trade and go long at that point. So really what I'm saying to you is that when a market comes up here for this, even in this case here, if you got the stop just above the level here, then allow it to play out at the level. It takes time. It might even take a session or two to play out, but that's the right way to go about it, because you just need to, you need to make sure that, if it's going to fail, this is the number that it's going to fail at. And it can fail in a couple of ways. It could just go up here and reach it, basically, and fail from that point, or it could play out like this and then fail. And, you might want to swap sides and go the other side because you got support on that level there. Okay, so that's the 3 stocks. So I'm going to look at AMD. We did Alibaba, Alphabet, Amazon, Apple, Atlassian. What else have we got? Facebook, Goldman's, Home Depot, Netflix, Nike. So we're going to quickly just go through those guys. So this is AMD here. And there's no real change in our strategy here, because we're looking at this being an impulse wave here, and then a corrective wave back up into this 50-60% retracement level, and then a move down. So we're just waiting to see that. I've probably mentioned before, if we get support on 56, then a nice tested support on 56, then we can look to go long, because we'll be above the 61.8% at that point. So we'll leave that. We're going to have a look at Alphabet now. And with Alphabet here, this is why I'm counting it to the upside. Yes, it also could fail from this point here, because we're looking at, let's just go in and see what I've got on the tick chart here for this. So there's a couple of ways we could count this here. So there's no trade here just yet for this, but we could look at this as an A and a B and a C here. This would be in line with what's going to be occurring in the S&P, but the Nasdaq is doing something a little bit different. Let me just go into 20 ticks here and we have a look inside this thing. Right, okay, this is the other count that I've got here. Right, okay, so this is more of a bullish count. This is looking at all of this a little bit differently, having wave 3 here, and then I'll just dull this one out because that's So I am moving quickly through here. I'm not recapping and all that sort of stuff. So wave 3 here, an A wave here, an A and a B and a C for the B wave here, and down for the C wave here, and then essentially moving up higher from that point there. And there's a good case for that. We can look at this as well. We can look at this as an A and a B wave here, and then a C wave top in play here, and we can just drop from that point. I understand that. So if you're looking to go long at this point here, we could move that up there and put that on top there for that. It's higher risk there, so we'll just make that a half trade there. And if that's the case, then we'll look up to the 1500 there. This correction works in terms of an A and a B and a C, an expanded flat for wave 4, and then moving higher from that point. We know that we're looking for the S&P to move lower, and it can do that right from this point, so we need to be mindful about that. So I'm working a few counts with this particular market here, so but nothing really to be had here. Look, I may have talked about going long from here. If that's the case here now, then I'll just move that up under that low there, and we'll put that there as a stop there, just to sort of make that work in a way. So I obviously talked about going along above the high here for some reason last time or something, but if I did, then just put the stop under here, just lock in what you've got here at that point there. So that's on the 4-hour chart low there. And the next stock is Amazon. So with Amazon here, that was interesting. We've talked about this a little bit now. I mean, in the first instance, we're looking for, well, the A wave, the B wave, and the C wave down here for wave 2, and then moving up here. And in a way, that makes kind of perfect sense with a classic trading levels pattern across this level here. So that would be the arrival, the reaction in 3 waves, the first high above the level, and then an A and a B and a C here. And then we look to go long from that point here. So if this drops down here, then that there is that B wave high here. But of course, we'll be able to get a better position for our long trade here. So I just really want to just allow this to play out here, and then we can pick that thread up from that point. The Apple is next. It looks like Apple's actually made a new high here, so we can look at this as 4 here, 1, 2, 3, 4, and 5 here. So we may even, I better go to the tick chart and just check this out a bit better. I better go to 100 ticks because I haven't done anything there for that. So in this instance here, obviously we've been talking about it in one way or another. Just get my noggin around it a little bit. You know, when we talk about this from the top here, well, I think we've talked about it before. I mean, this high point here, you know, can turn this into, you know, a corrective move at this point. And also, too, we have made highs above here. So, sure, it could still be a B wave to the upside, but so I'm just pulling it apart in my mind. We've got 1, 2, 3, 4 here, and then making a new high here for 5. So that really plays out in this one here. That's that leg. So then from, I suppose we've got to call this wave 1 and 2 here, and 1 and 2 here. So I've already done that work from that point. So, oh, that's interesting. So from this low here, from this one, that's 5 waves up to that point I've got. And we're getting an impulse wave here. So we can, at minimum here, now expect a retracement here, minimum. So taking that high here, So I can't draw on this side here, but we'll be looking for an A wave here, a B wave here, and a C wave moving back down through to here. So we don't have a trade set up for this. We'll just allow it to unfold. But that top there now gives us a trigger to the upside for that. So we'll just leave that. We'll see what Thursday brings in the US. And we may be able to buy Friday morning, so I will pick this back up. So the next one is, let me go onto the 4-hour chart, Atlassian. So I haven't got it here. Let's go to the hourly chart. Okay, so I'm just moving through these quickly because we're just recapping them, because I think it's just a good way to go, just lightly go over them a little bit. So this is okay. We got 3 waves here, so that wave's 4. We got 5 waves here, so that's okay. This one coming down through here, we could count this as wave 1 here, or an A wave, and then back here, then 1 and 2 and 3 and 4 and 5. So we can have an A and a B and a C wave to here. We could also stop this out here and have this down for 1 here, back for 2 here, 1, 2, 3, 4, 5 here, and forget about the spike, and then have wave 4 come back because it hasn't overlapped wave, what's the name here, wave 1. Yeah, so we could actually have this here as just the first 5 waves down for the A wave, and then have 3 waves back for this one here. But I'm just looking at it this way here, so because I want to get a trade set up on the long side, I don't want to miss anything. So the other way to look at this is we'll call this the A wave, then an A and a B and a C wave here. For this to be a C wave here, we still need 1 more leg up here, so this would be 1 and 2 in here, 3rd wave here, 4th wave here. We want that 5th wave to come in here. Once that comes in here, which will be this top here, 1, 2, 3, 4, 5, once that top comes in and then the market drops off, we can use that high, wherever it may be, however it may be, we'll use that for our long trade at that point if the market's going to go up. Otherwise, we'll expect it down here for that. So we're in a bullish trend. We're looking for a long trade, and we're looking for the first high above the level here on 180. So this is all of group 2 here, 65, 72 and 80 of minor degree, and we have the major level 200 here, medium level 150 here. So that's how we break the problem down. We're looking for support on 180 in a nutshell to go long. If we don't get it, that's okay. We'll just allow the market to fall back, and we'll pick it up again at a lower price. Okay, moving along a little bit. Facebook. So Facebook here, I will look at the tick chart here for this as well. Let me just go in and have a look, see if I've done anything at all here for this. That's 100 ticks. So we'll look at 20 ticks. No, I haven't done anything there. But let's go back to the 4-hour chart. Okay, so 4-hour, and let me just, I'm just tuning in here, and 1 hour. Okay, so yeah, it's a little bit annoying. So if I come back to the 4-hour chart, so we can have this, we counted, 1, 2, 3, 4, 5 up here for wave 3. That's okay. Then we're looking for wave 4. I know wave 4s get complicated. So I know that we've made a little tiny high here, but it just didn't really resonate with me. So we could put wave 4 here, I think it was, with 1 and 2 and 3 and 4 and 5 coming in here, but we've just slightly hit. So I wasn't really happy with this. I'm more happy with this if I remove that and have this here as the A wave, then an A and a B and a C for the B wave here, and then down for the C wave here. So I'm much happier having it sort of that way around here, because as a wave 5 here, we should be getting, as that's wave 1 here, we should be getting something a little bit more positive for all of that here. So I'm thinking the A, the B and the C for wave 4 here. and then pushing up here. But the problem is you know that we've got the S&P 500, we've got that current situation in the market where we're looking for an A wave, a B wave, and a C wave lower from here. So, you know, I may have to put that in the top here. I don't particularly like it. The other way I've got this counted here is like, well, this is how I've got it counted here with an A wave here, B wave here, and a C wave here for this. And obviously I've talked about this before, so looking about, you know, taking on board the S&P 500 and the NASI and all that sort of stuff, looking for a move, you know, down here, back here, and then down again. That's what we've been looking for. But this is, Facebook's not telling me that. Facebook is telling me that it's moving higher, and the, you know, as soon as it takes that, well, basically as soon as it takes out this high here, then we know that it's bullish at that point. But it doesn't really give us much space to get to, because we can only trade to the 250, and then there'll be a correction there. So also too, in terms of trading, this is, well, the major level here at, I should put it on the 200. Then we've got group 1, 2, and 3. If we get support on top of group 1, well, then we'll get to the 5, the midpoint there. And that's what we've got here at the moment. And normally we'd take out this one here. The other way to go here is to go long here, but this is just hindsight now because it's not there. And the market has found that level there as support now, and looks like it's currently moving up higher. And also too, this this here appears to be corrective here, as wave 4 here. So what we'll probably end up seeing here is a third wave, fourth wave, and fifth wave. So if we just hold on a little bit, we'll probably see that move up to the old highs roughly, or say the 240 area there. 240 is a nice way to go. And then we're likely to see an ABC pattern here come into play. Now, it's either going to push up from there or we're going to push down from there in terms of what we're seeing in the S&P. But at the same time, this is the point there we can go long at here and then take profit here for that. So we just got to wait till this jiggles around a little bit and gets into play here for a long trade. So I'm going to leave it at that. There's no point in chasing this and having a little bit of a profit for a little while and then facing this, you know, it doesn't make any sense. Right, General Electric, we'll just go to the 4-hour chart here. So we're expecting it lower, but let's just get a few things into play here. We don't particularly want to short it into support here. That's the problem. One of the problems. I mean, the support here is obviously we're between two major trading levels here, the $6.50, and you can see it plays out nicely here. It's just a weird number, that's all, but it really kicks in. So we've got our 61.8% here. We've got our 650 here. If we're going to short this, we should have done it after the 5 waves to the upside here. So I'll just leave this play out here, but we can expect more downside to come here. Just clean this up here. Might just have a look on the tick chart for this as well. Let's just see what we've got here. So looking at this, we've either got this down here as 1 and 2 and 3 here, and ABC for wave 4 here, not too worried about the spikes here, and then we'll drift down to this level here and then have a corrective pattern here, and then coming back up meeting supply levels here and then moving down from that space there again in that there. So we can certainly short it over this side over here. I will just have a quick look at the tick chart here. and see what we can do with that. So that's our top. We've got 1, 2, 3, 4, 5 here. We've got this here as 1 and 2 and 3 and 4 and 5. 1, 2, 3. Do we call that wave 4? It has bounced rather high though for that. Just getting the structures in play first. 50% retracement level. Is that part of that or isn't it? That's the gaps for you. Let's see if I can look at it a different way. Is that a new low here? Not quite. That's corrective. That's impulsive. So we've got some sort of A, B, C here for possibly wave 4. All of this is probably wave 3 here. This is, it's just one. Just using this to count with is probably not the right thing to do, but I still needed that one. So 1 and 2 and 3 and 4 and 5 to here. Yeah, so probably looking like this, I'd say. That will bring us down into that 650. That 650 is important here. So then we'll get our ABC bounce back off that as well. So a bit of a rough spot coming through here. So it'll just be nothing really to do here in this one. Must be getting tired making mistakes. Okay, so it will probably pan out something like that. We know that this is the 50-60% retracement level here for this, so this should drift lower from this point here, and of course any move above, well, I'll put it here to start with. That's at the 50% level and 61.8% levels. So at this stage, we can just use that nicely. So as long as the market stays under that, if you are short, then you need to leave your stop above that there. Okay, let's go back to the 4-hour chart, and we don't need to look at Goldman's. We'll just have a look at Home Depot here. So with Home Depot here, it's moved up here nicely as well. So we could probably look at this as 1 and 2 in here, and 3 and 4 here, and 5 here as a top here. So it looks impulsive to me. Technically, we're looking for the markets to give us an A and a B and a C here, but in this case here, that might not be the case. We might just see an A and a B and a C here, and then move up, and we'll be triggered from that point. So I'll come back to this a little bit later here, because the good thing here is that we're at a level here, a medium level, and we're the market is vibrating across this level, and we're just looking for entries. So we would have looked for entries above this one, and then we'll look for the next high down here. It's a little bit early to move into that, to call that the first high above the level. There may be another little high there, but I can just see visually that we've got 5 waves looking in there, so we'll be okay with that for a moment. And I want to have a look at Netflix. So this was kind of interesting here, because we were looking at 1 and 2 here, then 1 and 2 in here, 5 waves up here, then wave 4 here, and then wave 5 for wave 3. Then we were looking at this as being the A wave here, and then we were looking for a B wave here and a C wave here. And obviously I'm looking at it in other ways, because we went to do half a position long here, half a position long here, and I had this under here, which now somewhere under here, wouldn't have been there, would have been here. So now we can bring this stop up into this space here, and that can look there. So 432 we'll put the stop at there. You can go to 437 if you wanted to, but you might get stopped at that point. What we really want to see here is that, yes, the market can fail from here as a B wave here and then coming over for the C wave here for this for sure. And I understand that. In fact, it's probably saying that. Let's just, if you are long here, then we'll just take part profit on this level here, and that will solve a lot of problems. So we'll just take part profit here, and we'll look to leave a bit of skin in the game, and then we'll look to see if we get a setup to go long on the next level, which is the 50 here. So we'll have the arrival, the reaction, the first high above the level, and then some sort of corrective move here, and then we can look to get back in over here for that. And you can draw a line through there, but it's just nice to be on the level here for that. If this is corrective, then that would be the an ABC for the A wave, the B wave here, and the C wave coming into this space here. Otherwise, we can look at this as being bullish as 1 and 2 here, or even what we can do here is also copy that, put that here, and or copy that and put that there, and copy that and put that there. And wave 4 can be in place here for this as well, and we can look at this as 1 and 2. And I think we talked about this before, and that's why we put those long trades there. We'll look to build back in over here, so take half of it off the table here, and we'll put the other half back in over here when we're safe. Yeah, that's managing the exposure. And what else have we got here? Just let me think. Did we look at Tesla? Here, nothing really to do here. We're at 1,000. Well, I won't worry about looking at this right now for this, but yeah, we need to see some vibrations here, and then we need to see support here on the trading level 1 here for this. And yeah, we're at resistance. There's no point in doing anything here at the moment for this, so I'll just leave that. I think I kind of covered most of them. I'll better have a look at Nvidia, and here with Nvidia here, then we've got the same little problem here as well. It's difficult to count this up here as 5 waves, so I'm still scratching my head about that. But also too, I want to wait here as well. Just because of the S&P 500 and the markets that have created the same patterns as coming down here for an A wave, back up for a B, and down for a C, we need to let them play out. But I'm not interested in shorting against the trend. It just doesn't make sense to me in case that it's only a short journey. We're better if it does pull down, well, then we can look to buy on that. But otherwise, we won't worry about that. And the other one is, bear with me, Nike, I think. So Nike here, we're expecting the same. We may even be short in this one. I just couldn't quite remember what we'd done here, but I'm starting to make notes in a spreadsheet now. So very shortly we'll be improving the trading side of things. So yeah, the first month has really been about just me settling into the US stocks and working out some systems and processes in place and so on. So I am improving it behind the backgrounds a little bit, and so we may be short here because I can see what we've done here with this. So to wait for the stop wait for the first high to come in, so that can be the stop here now if you're short. So we've been looking at this as coming down for the A wave, the B wave, and the C wave to move lower in all of this space here. So I don't think it's going to pull all the way down here for that. So we'll put that up here. There'll be some sort of relationship between wave A and wave C here. And if this high is taken out, well, then we'll look to go long from that point, because otherwise we'll look at this. It looks a little bit impulsive up here, but let's just see how that plays out there. And Microsoft, do we have a look at that? So with Microsoft here, we let me just bring this across here and this here. So we had the long trade in here, didn't quite get to the level. Hopefully that you've taken some out of that. We've seen this pull back. We've been stopped out with whatever was left in that or whatever. And then we're just really looking at this being part of the rest of the markets, where we're looking down as an A wave and a B wave and a C wave to move down further from here. So I'm just not going to do anything here. We'll just see how Thursday plays out. We're seeing a bit of weakness in the market, so this may just pull back to a certain point, and then we can look to move in on that. I think we'll look at it on the tick chart as well. 20 ticks. So this is the move up through here. So I'm just having a little quick count. So I can see we've got 1, 2, 3, 4, 5 here for 1 here and 2 here. So this will also be like a third wave coming in, a fourth wave here, and then a fifth wave coming up here, even though it looks like, I mean, it could be a third wave because where normally you get the gaps, but let's just go 1, 2, 3, 4, and 5 here. So that would leave us with wave A here. And then this would be an A and a B and a C wave down here. And this is probably 1 and 2 and 3 and 4 and 5 here. So that really makes the ABC pattern here. If I can just do this for a moment. So the A wave here, B wave here, and C wave here for that. And it's kind of interesting now looking at this, because we can look at this as 1 and 2 here, and yes, and 1 and 2 and 3 and 4 and 5 here. So we're starting to see an impulse wave to the downside. So you could short this if you wanted to and just leave the stop above here, but you're trading against the trend, so that's you know, that's another thing. Right, so that just leaves us actually with wave 1 here and 2 here, and that's just the third wave here. So I don't know if all of this is the fourth wave and we're coming down for the fifth wave. I can't draw on this side, it's so annoying. Yeah, it looks like the A wave, a B wave, and a C wave here, then 1 and 2 and 3 and 4 and 5 down here. So what we'll probably see is we'll see this come down a bit further, and then we'll see a rally from that point as an A and a B and a C wave coming in there. So if I go back to the 4-hour chart, so this can be counted as an A and a B and a C wave up here for that. And then what we're looking at here for this is we're looking at the first impulse wave coming down through here. So once that comes in and that moves back up from that point, you can short it under that point there. How far it will get you might just take you down to fill the gap at the 61.8% mark and then move up from that point. So that's the trap. Otherwise, it will just continue. There will be something going on here for sure, and then down from that point. Well, that would also leave us at this nice whole number here, so number 9. So yeah, so this, if you're going to add to it, then this would be the adding place here, or you could take profit here and then just look to short here again if you get the setup here, the classic trading levels pattern under that level there. So anyway, I'm not that interested in that at the moment. I just wanted to go through everything and just I'm trying to find a method where I can keep our finger on the pulse sort of thing while while we go through each week. So I still haven't sorted it out, but this is quite a long video actually, so I need to shorten that. And yeah, anyway, we'll get there wherever it is we're going. Alrighty, cheers.